Bitcoin has dropped by $5,000 in a few hours, and this isn't random. This crash was triggered by 3 specific things. One of them could hit the wider market even harder. And honestly, we're probably not even close to the actual bottom. Not just Bitcoin either. The entire market has fallen. Over $640 million in liquidations show just how fragile the market is right now, and why today's drop might only be the start. So the two big questions are, where is the bottom, and how likely is a wider market crash? So let's start with what kicked this entire sell-off into motion. A huge driver of sudden drops like this is something called a liquidation cascade. A massive chunk of crypto market trades are bought on leverage. Essentially, you're borrowing money to invest. Here's what happens. The price will begin to dip a little. Traders using too much leverage will get liquidated. Their positions then close automatically, pushing prices down even more. And those drops will then liquidate more positions, and so on and so forth. So this fourth selling is what makes an irrational looking move fall way further than what people would expect. What looks like a buy the dip moment is often just the market flushing out leverage traders, not a real buying opportunity. Now, why has this liquidation hit so hard? Because sentiment is already on the floor. Everybody goes on about how fearful the market is right now. There hasn't necessarily been a big news event today that has caused all of this. Instead, we're in a period where any small quiver quickly becomes amplified. And when consumers feel like a crash is coming, liquidity dries up, everyone de-risks faster, and every tiny movement will be exaggerated. The crypto market is even worse than your traditional trading markets, because firstly, it's 24/7. There isn't anything that it really backs quite yet. For that reason, it's driven by the expectation of what everyone thinks it's going to do. So fear often creates a downturn. There's also something else that is in the forefront of everyone's mind. Everyone knows the ongoing AI circle. Everyone's seen the diagram where they're funneling money to each other, 100 billion here, 100 billion there, all waiting for the first one to slip up, for what feels like a market crash that's going to happen as and when it occurs. If or when this does happen, large holders may rotate capital out of crypto and into what they see as safer long-term plays, something like AI. And because crypto is viewed as the highest risk asset, it's going to become the fall guy for all of these. Whenever capital is needed to be freed up quickly, even if nothing is directly happening to crypto, money will get pulled out to chase opportunities elsewhere. And from a macro perspective, things aren't exactly helping in the wider market. Interest rates are still high compared to the 2020 to 2022 era. Holding cash, treasury yields, or money market funds safer, especially in the volatile crypto market, pretty easy, and most importantly, it's actually returning you for the first time in a while, which you've not been able to say about it. Therefore, it makes sense for large institutions who are looking to de-risk to put their money elsewhere. And we've got to remember that institutions hold huge amounts of Bitcoin and Ethereum. They are the big holders in the market. So if one of them moves, then the whole market is going to feel it. So if they need to de-risk, or they're just moving capital to new opportunities, that's when we're really going to feel it. Now, throughout this video, I have used Bitcoin and cryptocurrencies interchangeably. I do know the difference between the two, and yes, they are different. Days like this don't come from coin-specific news. When Bitcoin is hit, the entire market is quite often usually hit as well, unless Bitcoin has some very specific news about it to either raise the price or get it to come down. When I talk about crypto, I am particularly looking at Bitcoin and Ethereum. Also other smaller coins, I'm aware of this, but these are the two that make up majority of the market. Therefore, that's where my attention is. So where is the floor? It's impossible to give a number and probably illegal, so this is purely speculation. The local low for Bitcoin last year was around 76,000. We're currently at 86,000, so a couple more days like this and we'll be back right there. A retest of 60,000, the lows of 2024, isn't unrealistic, especially if the wider economic environment worsens. Crypto's next move is going to depend just as much on the macro landscape as it does on any crypto-specific news. And when we look at the bigger picture, we've got to pay attention to the correlation between the market, crypto, and the economy. So in the short term, there's very, very little correlation between each of the markets. In the longer term, there's about a 0.6 correlation between the economy and the stock market, and there's about between a 0.4 and 0.5 between the stock market and crypto. So it's likely that this is just a sign that if something does go wrong in financial markets, which it feels like something is about to go wrong, then there is going to be a huge crash, and maybe crypto is the early warning sign for that. So the economy is really weak, the stock market is surprisingly strong, and crypto is falling. We're kind of in economic purgatory where we don't really know what's going to happen next. Crypto has also become increasingly tied to high beta tech stocks on the Nasdaq. So when investors rotate out of risky assets, or when AI stocks wobble, crypto usually falls even harder. Even if nothing happens in crypto itself, a traditional market can bring it down. And another key factor is simple. There's nothing really to look forward to in crypto right now. The big bullish reasons have gone. Bitcoin ETFs, the halving, institutional adoption. Obviously, all of these can be furthered, and that's likely what we're going to see in the future for any future runs. So there's no fresh narrative currently bringing in money. So when you put it all together, liquidation cascades, weak sentiment, macro uncertainty, market correlations, institutional de-risking, narrative exhaustion, it becomes clearer where crypto is failing without one obvious trigger. It's not a single event. It's a stack of fragilities all hitting at the same time in a risk-off environment. And that's why today's crash might not be the bottom, but just a part of a bigger correction unfolding across the market.